on the stage and receiving members of her panel, as is Ms. Ute Collier. She is the Deputy Director, Knowledge, Policy and Finance Center at IRENA. Ms. Ute Collier will be setting the scene for us on this plenary session before we kick off. Over to you, Ute.
All right. Good late afternoon, everyone. I'm pleased we managed to get quite a lot of people back from the coffee break, and I'm sure some of you were here at 8:30 in the first session, so we do really appreciate your staying power. So in this final session, we will pick up a number of themes that have already been discussed today, but going into more of the details and nuances. Specifically, I mean, in this session, we want to focus broadly on universal energy access. You've already heard some of the numbers, and IRENA is, of course, one of the custodian agencies of the SDG 7 target, which requires us to get universal energy access by 2030. And you know, the situation isn't great. We have more than 680 million people without access to electricity, and also not to forget over 2.3 billion without access to clean cooking. And of course, many of these issues are linked, and you are well aware of some of the health implications, etc., of the clean cooking issue as well. So it's not that we don't have the solutions we have, and we're very clear that off-grid solutions are important part of it, and you've heard of productive use, etc. already, and I mean, really, everything is important, whether it's households or businesses, what have you. But the big question is then about how do we get more money into it, because as we said in earlier sessions, it's only a tiny, tiny fraction of the overall funding goes into the off-grid sessions. So there are very substantial investment gaps, and we do need to think about what kind of models we have that actually work. And our feeling is that, you know, despite there being many, many good examples of what can work, I think the knowledge about them is not necessarily widespread. So for this session, we want to get some feedback from a number of stakeholders who work in this sector, and we have an excellent panel with us. So what we're trying to do, of course, try and make sure that we don't hold you for too long, but we really want to listen to the great people we have on this topic. So I'm going to hand over to my colleague Kavita Rai, who will be doing the moderation and introducing the panel. Kavita.
Hello, everyone. I hope you are alive after the tea break. And sorry for this extended period of time, but I'm really looking myself forward to the panel speaking. I think it's a very, very important topic. You know, what sort of delivery models are there for scaling up? My name is Kavita Rai. I am a Senior Program Officer at IRENA. I've spent 30 years of my life working on renewables. I'm originally from Nepal. When I started, off-grid or renewables was a very unknown word, and the country had 12% electrification rate. 30 years down the line, it now has over 95%, although I can say, you know, some parts are, you know, the grid electricity is unstable. But there are countries where scaling up has been done, where the public, private sector development partners have come together and spent time, efforts, and then there are various delivery business models, I think, from the country I come from, Nepal. Without much further ado, let me introduce to you our panelists. Dear panelists, please come on the stage as I call upon your name. The first one, Mrs. Thabile Nkosi, Director of Ministry of Natural Resources and Energy, the Kingdom of Eswatini. The second, Mrs. Inam Akote Eya, who is the Regional Director of Africa, the iTrack Foundation. Please give her a round of applause, Inam. Daniel Kitwa, Director of Energy Access Finance, GreenMax Capital Group. Daniel, welcome. Martha Wakoli, Manager of Clean Energy Access, CLASP. Martha, welcome. Jaredine Morris, Co-Head of Africa Carbon Trust. Jaredine, welcome. Francis Salesha, Director of Africa Energy Program, RMI. And last but not the least, Ian Siega, Director of Policy and Business Development, the Alliance for Rural Electrification. I hope I have everyone. Okay, panelists, I think I will stand here because I've sat for so long. We know that there are, various effective models for scaling up off-grid renewables, and IRENA's statistics have shown by the end of 2023, at least about 155 million people had gained access to energy using off-grid renewable energy technologies. So there are lots of innovative models, delivery models that are there. And I really want to put the first question to Martha of CLASP. Martha, you've led CLASP's most recent publication, Leave No One Behind. I think very important. I'm excited about this report, which quantifies off-grid appliances, access gaps, and the substantial investments that are required to close that gap by 2030. What are the highlights of the investments required, and what sort of delivery models have you found through your research that looks at effectiveness in leaving no one behind?
Well, thanks, Kavita. I hope I'm audible. Good afternoon, all. As you heard, my name is Wakoli. Greetings from Nairobi, Kenya, which is where I'm from. It's also one of the foremost off-grid appliance markets, so hopefully there's something you learn from this. So before I get into the question specifically, let me just provide a little bit of context around who CLASP is and what we do for those who may not have heard of us before. We're an international nonprofit, and we think of ourselves as the leading authority, right, on the role of efficient appliances in fighting climate change and improving people's lives. And we've been doing this work for the last 25 years. So what I'll try and focus on with respect to the question that Kavita asked is provide a little bit of context actually from the report so that then I can dive into the answer on delivery models. So if you think about off-grid appliances in specific, different from off-grid solar home systems or lighting kits, off-grid appliances have only penetrated about 2% of the population that actually needs them. And then if you dive further down into that data, you'll see 98% of those who have not been reached. Even if the appliances were to be sold in installments or on a pay-go basis, only about 20% of that population would really be able to afford them. So the question is, then how do we close the gap for the remaining 80%, right? And so CLASP, since 2016, has actually been working with appliance companies, and we've been delivering subsidies, grants, and awards to more than 150 companies. And we've delivered more than $10 million actually over that time. And we've learned a few things while doing so. So today, I'll focus on two of the things that we've learned because I think they're the most easily transferable for the broader DRE sector. The first is results-based financing that I think a few members touched on earlier today. But the unique way in which we deliver our results-based financing can be captured in two sentences. The first is that we combine our financing with research, quality assurance, and small capacity building grants for the businesses that actually access the RBF. And the reason we do that is to not only improve the quality of the products, but also of the businesses that provide these products. The second sentence is that we use a reverse auction mechanism. Basically, what that means is we allow the companies to submit bids for the incentive level that they would like, based on an assumption that companies are better at deciding or evaluating what their needs are, right? And so as opposed to us setting predetermined incentive levels, we open it for bids, and what this serves as is it's a price finding mechanism, because then we get different bids from different geographies and get a sense of what the retail price is for the appliances. And additionally, it works the internal muscle, especially of these early stage ventures, for them to strategically think through pricing and sales. And then the other delivery model I'd like to just highlight briefly before I pass it on to the next speaker is the idea around supporting the market ecosystem more broadly, not just the companies. So we've recently been working on a facility called the Energy Access Institutions Facility. And ideally, we provide some core funding and technical assistance to market institutions like Googler, who are on the previous panel, or AMDA, the Africa Mini-Grid Developers Association. Now, the thinking behind this is that these member-led associations or institutions are best placed to engage with governments or collaborate with them, especially on policy advocacy and market building activities. Think demonstrators, think fiscal conversations around tax incentives, etc. And so based off of those two areas, then what we've seen is that working directly with companies, especially early stage ventures, and supporting them until they're commercially viable, and then also supporting the ecosystem through working with the market institutions that then work on the policy and regulatory aspect, helps to scale, right, how you deliver access to appliances. So imagine if we could do that on a much wider scale. Increase the volume of funding, so we're talking billions of dollars in funding over the next 5 years to close the gap for that 98% that I said need appliances but don't have access to them yet. Thank you.
Thank you, Martha. I would also request, I think because of the, there we go, because of the shortage of time, I think, for speakers to be a bit succinct and finish maybe in 2 to 3 minutes, if possible. I would urge everyone to read the report, Leave No One Behind by CLASP, and where I think all these findings will be elaborated. Jaredine from the Carbon Trust, as per your experience, what specific characteristics in off-grid renewable energy delivery models make it really attractive for investors? Because when we talk of off-grid, by the way, at IRENA now, we're also trying to define what off-grid means. It doesn't mean only those in the remotest rural areas, but also maybe, there can be off-grid communities in peri-urban areas. So if you can touch upon that a little bit as well, and have, off-grid in a little bit slightly elaborated definition of off-grids here. Jaredine, over to you. Thank you.
Thank you so much. I'll also maybe very succinctly just talk about what Carbon Trust does in terms of energy access. So the primary or role that Carbon Trust plays in terms of energy access is through our Transforming Energy Access Program, or T. So this platform supports the development of various technologies, businesses, particularly SMMEs, and skills development to enable an inclusive energy transition. We work in sub-Saharan Africa and Southeast Asia, and so the point is really to drive energy access with the aim to improve lives, livelihoods, and boost green economy opportunities, as I said, especially for SMMEs, and with a view to economic diversification. Some of the partners we work with are here today as well. So Goldglow was here up on stage earlier. CLASP is another one of our partners in the T program. We also have a T Learning partnership, which aims to develop capacity building and skills to advance energy access as well. And we've developed various guidelines and training to grow the expertise within this space. So here my answer is informed largely by our work under the T program, but we do also have a few other programs as well where we look at innovation and catalytic work, and then particularly in South Africa, we've done some work to try and understand the complexities of energy access within a country that ostensibly has quite high electrification. So again, several other speakers have remarked on electrification of their countries. South Africa is sitting at around 86% electrification. However, the number is misleading because what we're finding in South Africa is as electricity prices have skyrocketed, people cannot afford electricity. Our free basic electricity grant, the subsidy, only provides 50 kilowatt hours a month to indigent households. It is non-standard, very difficult for these households to register to receive this grant, and I'm sure we all know that 50 kilowatt hours doesn't go very far. And so what happens with these households is, once that free allocation is up, if they receive it at all, and only 2 billion out of the 10 billion qualifying households do, they then revert to unsafe methods for cooking and heating. So we've looked particularly at areas around affordability and community ownership. So with that lens, my answer is really to say that it depends very much on the situation and the investor, which I know is quite a platitudes kind of response. But I think different delivery models depend very much on what is needed in particular circumstances and matching that with what drives an investor as well. So for example, impact investors would be more interested in financial mechanisms that help build that bridge between a market sort of reality and that unaffordability aspect, for example, and those who can't pay for electricity. So they're really driven more by the impact of having the electricity within those systems and how that can galvanize further growth and economic diversification, shifting households from simply being able to survive into a mode where they can thrive. And so this needs to be developed in a very collaborative way with communities, with developers, and with investors. This type of investor may also be a lot more risk-friendly, for example, where others, say a venture capitalist or a commercial debt provider, might be driven by profits, by the dividends they get out, or by ensuring that there is a very consistent payback period. So matching the delivery model with the needs of the community and the needs of investor and working collaboratively amongst those actors to achieve or find the best mechanism is really what we found works best. Very finally, just to touch on what I think all investors, regardless of what drives them, are looking for, and this has also been touched on today, is ensuring and enabling policy and fiscal framework. So governments can play a really key role there. And as I say, developers taking on that really key role in fostering collaboration amongst all actors, and thus being able to bring everyone together and also provide certainty in those respects. Thanks.
Thank you, Geraldine, for that. I think we at IRENA is also, I think you've heard from Thomas from the previous session from Sadc Foundation, saying we really need to take an ecosystem approach. And not only that, I think I do agree that, you have to be context-specific, time-specific, region-specific, village-specific, community-specific, right? Thank you for that. Moving on, I think I wanted to touch a little bit on the topic of what really we are looking at today, which is scaling up. I know off-grid scaling up in many countries in Sadc region, if you've reached 80 to 85%, scaling up may be a challenge. Replication may be possible, or could be, or is very possible. I would want to ask Francis from RMI, given RMI's deep engagement with a different range of stakeholders from private sector to governments to policymakers, what are the strategies that have proven to have the most maximum effect or impact in scaling up and replicating off-grid renewable energy models? And how can these policy frameworks and innovative finance mechanisms and cross-sectoral partnerships be strengthened? I know that's a lot of, that's a big question, but you can choose, Francis, if you want to just pick on one.
Thank you, Kavita. Indeed, big question. Good afternoon, all. A pleasure to be here. Thank you for the invitation. I can share insight, and those insights are really derived from the work RMI as a non-profit has done over 42 years now, 15 of which in Africa, both West and East Africa. And perhaps very quickly, I think there are 4 pillars we could touch on. A first one that relates a lot to business models, knowing what works, where it works, how it works, and who can make it work. So we've explored about 5 different business models, be it energy service companies, being community-owned mini grids, and I want to insist on the own part, private, public one. And that diversity in models really matters. The ability to be able to cover different situations, different locations, is quite an important parameter, even for investors. Not only impact, but investment. The second point, I think you touched on it, it relates on the ecosystem approach. Making sure we have co-location of energy provision, energy supply, with other activities. I think the previous panel touched on it. We have a flagship program, Energizing Agriculture program, in Nigeria, which is looking at that, for instance. And it was really, really reviving and interesting to test e-mobility, for instance, in a community southwest Nigeria, Gbamu, that's the name, where we were able to demonstrate how that impacts livelihoods, obviously, but also how that impacts the tariff and the viability gap on mini grids. And then you can bring in the appliance supplier, the equipment manufacturer, that needs also a business model. So it's a win-win-win partnership that we have to be looking at, whether it's agriculture, whether it's mobility, cold storage, being very deliberate on that. And we've worked on that with partners such as WellClasp, for instance, making sure that we can advance those models and advance them at scale. In Nigeria, we are talking right now about 20 communities or so. So that's progressively how you can make it work on a couple of communities, right? But how about scale now, which is the core of your question? Well, that's where RMI is bringing a transformative value, because we've been looking now more at pipeline development. It's an approach we've taken in the Caribbean, where we've set up a climate catalytic special fund, CCSF in short, where we are acting as a de-risking entity, bringing together hundreds of mini grids, or rather, should I say, distributed energy resources, and pairing up with Cygnus Capital, who has under management a portfolio worth of 400 million assets. That's still very far from the $10 billion gap there is, but it shows what's the direction forward, and it brings the ability to actually structure blended finance, making sure the initial fund of worth 100 million can help to de-risking, but also that we can ground it climate finance, but also private capital. And that's why it becomes very interesting. We are deploying a similar approach right now in Nigeria, as I speak, where partnering with the World Bank, the intent is to de-risk up to 100 mini grids as part of the DARES program. You'll forgive me, I do not always remember the acronym, but in short, that should be distributed access for renewable energy systems. And that falls under the M300 initiative. So making sure we are looking at scale, but we de-risk the asset to enable investment. It's one of the core points we've been looking at. So project preparation is critical in that regard. And that's why when one asks me about RMI, really the best word I have in mind is an enabler and a catalytic actor to make sure you can actually de-risk what can be ready for an investment. It's quite an important one. Last but not least, I think we did mention policy a couple of seconds ago, to encourage us to look at policy not only from an energy perspective, because we do that and there are certainly gaps, but also policy issues around agriculture and around enabling investment in country. Those are characteristics we've observed in some of the countries we've worked in. I would mention, for instance, Ethiopia, where the need is there, the potential is there, because we're talking about thousands of mini grids, but having the right investment framework, even when you do have a pipeline, is very critical. So I'll pause there, but if you were to ask me one key word, I think I would say partnerships. That's definitely the word here.
Thank you, Francis. I think the word partnership have come up quite often today in all the sessions. And at IRENA, we're of course very thankful for all of you, our partners, for joining us at IRIC. One thing I want to highlight to all the panelists, when we talk of energy access, often people relate it to electricity access. But I think we need to go beyond, and like Francis touched upon, the fact that there are other sectors like agriculture. We have found out through our engagement with 8 countries that the agriculture sector is so heavily reliant on fossil fuels, and there's very little that the renewable energy market has not captured. And there's a long way to go on that. So when we talk of energy access, if you could also think about it in a wider angle at that. Moving on, I think Jens, moving along a similar idea, we have seen that at IRENA between 2010 and 2021, about 558 million was the investment number which the off-grid sector had attracted. But to me, this is not too much. And out of that, DFIs were the largest capital providers for off-grid solution, accounting for 79% of public investments and 27% of total funding, which was quite interesting data. So Jens, given ARE's large experience, you have over 200 members. What do you think are probably the most effective in mobilizing capitals, from different sources? Any good example that you can highlight?
Yeah. This is on, right? Yes. So first of all, the scale we're looking at here. So we heard numbers around 35 billion per year that you need for universal energy access until 2030. Just to put that number into context, that's only 1/10 of the turnover of Saudi Aramco, for example. It sounds huge, but actually, if you contextualize it, it's not that much money. So I'd like to put that perspective first. Now, what can we do with 35 billion per year? We can power 560 million Africans. We can mitigate 600 million tons of CO2 equivalent emissions. We can power something like 500,000 to 7 million green jobs, depending on the source we're looking at. So pretty good impact for investment, in our opinion. What kind of capital do we need? The answer is obviously not simple, because otherwise it's already been done. We advocate for obviously blended finance, and I'd say relating to your question, we see 2 overall broad strategy lines. So the one is the more, for lack of better word, traditional or narrow approach, where you say, okay, we would like to invest in big projects with big ticket sizes, typically 50 million and above. There are certain institutions in the development space that have those kind of ticket sizes and limits. And unfortunately, currently where we're at in the off-grid sector, we only have a handful of examples in that kind of ticket size. So it's prohibitive for the majority of companies to access it. Now, I'm not saying we don't need that, but not exclusively. The second strategy is what we would say is a broader strategy of empowering a plethora of energy access companies to achieve scale. So currently the issue we see is we have a few market leaders, and then we have a missing middle, and then we have a huge amount of innovators that have gone through grant programs like Energy Catalyst under T or EEP Africa, those kind of companies. And there's huge potential and innovation in there, but we have that missing middle, and we need to find instruments to empower those to reach scale so that they can roll out projects at scale in the countries under the Energy under M300 or other initiatives. In terms of the instruments, so to do that, one thing we need is patient equity. I have a few examples on that. Another is grants for de-risking. Indeed, there were very good examples from my colleagues just before. I think key in that is to enable affordability as well. I think a previous panelist, for example, NG touched upon that as well. That's really the test. If we can have a market where we have affordable products and services, then we don't need all the grants. And then it can flow for itself. Two examples from Southern Africa. So we have a member or several members active in Lesotho. There's a project powered by One Power that received 12 million euros to power about 32,000 people. The financing mix there is patient equity from Electrify. So Electrify is a funding mechanism set up by the European DFIs and with EU money. And it also had a concessional loan from the REP facility managed by Camco, which was in local currency. And that's also a point we could discuss at length. But local currency has its advantages because it limits the impact of fluctuations. The second project is from Anka in Madagascar. We're looking at a ticket size of about 7 million. Here there was an interesting mix of finance from both public sources, so AFD and EU, with some concessional finance and grants, and different types of private capital. So we have one of the financiers, Atmosphere, is using carbon offsetting, and so kind of a type of climate finance. And then we have some private and venture capital in there as well. So I thought that was quite interesting. And then the business model or delivery model for the project is an agri-grid model where you have agri-sector as POE. So the commonality between those two projects and a lot of the projects we see is they're in that ticket range 5 to 20 million maybe. There are quite a few of those. They have some kind of element of patient equity. And then you have solid public-private partnerships, so a regulatory framework and a government that already backs the project. So those are kind of several elements to consider. I guess the summary or TLDR is we need all of the different sources. We need grants to bridge the affordability gap. We need equity to scale up the broad base of energy access companies, and then we need debt for scale, ideally in local currency financing, and then consider the ticket sizes. Yeah. Thank you.
Thank you, Jens, for highlighting all the different strategies. The weaknesses, I'm appalled at how little investment there is in the off-grid sector, despite everyone knowing that scale-up is possible, that there are markets that are there, especially in Africa. I mean, I would take that as a positive, I guess. If people do not have electricity, then that is a market, right? So I know I'll move the next question to Daniel. Daniel, you've been working, GreenMax Capital Group has been working on various financing instruments, grants, concessional loans. You've been linking up enterprises to financiers. And could you tell us a little bit about your real experiences with funds like CEI Africa or your first loss guarantee? Maybe successes of those will be a good story to tell. Sometimes we often, I think, tend to be a bit negative all the time, but it'll be nice to hear from you. How have you found any challenges and how have you overcome it? And what has been the real impact of gaining finance and investments? And also, Daniel, I think one thing that Jens touched upon, which was very interesting, because a few years ago I was doing an assignment for IRENA and I was looking at projects that were about about a megawatt each. So the missing middle, I think, we have not been able to crack that. And why not? Because take the example of the missing middle in Nepal, the country that I originally am from. Small hydropower actually really took off, and the private sector came in. There was hardly much. There was just policy intervention that anyone, you could go up to 1 megawatt. And that one policy intervention kind of changed the whole market, right? I don't know why these sort of lessons are not translating in Africa. And I think that would be, if you could elaborate a little bit on that, and whether the missing middle is somewhere where we really need to focus on.
Yeah, thank you, Kavita, for having me on the panel, and good afternoon, everyone. Just looking at the question is quite packed and loaded in terms of deliverability models from a finance perspective. At Greenmarks, we are a fund manager and a transaction advisor. We focus on energy access, energy efficiency, and productive use. On the energy access front, this includes both the infrastructure and the appliance side. And then energy efficiency is all about the next step of productivity. With regards to funds, we are involved in a number of instruments. At the moment, 4. CEI Africa, which is a one-stop shop vehicle. We have Green Shift Africa, a trade finance facility. We have Green for Access, a first loss risk mitigation instrument. And then we have Mwinda, an RBF program, which is country-based, ideally targeted for DRC. In terms of some of the ways we have been delivering and looking at lessons and successes, I'll just highlight a few instances for each of the funds. With regards to the CEI Africa, or the Clean Energy and Energy Inclusion Fund, at a design or conceptualization level, we took a holistic fund management approach and set up a foundation in partnership with Triple Jump and Persistent, our other partners, which ideally allows the vehicle to hold capital for 14 years, which is our investment horizon, other than the typical 3 to 5 year program. And that enables us to have a lot of flexibility in how we implement. And then in terms of the instruments, we do provide results-based financing, connection-based, results-based financing at outcome-based payment models. We have both concessional and commercial debt, and also technical assistance. In terms of how we practically do it, for example, looking at the RBF, we took lessons from legacy programs that preceded our instrument, and we realized a lot of RBF programs don't have control over the other financial instruments in terms of the capital stack that is out there. So you have, a promissory note contract, which is your typical RBF, but has no visibility on who on the other side is pre-financing. So that was the whole premise of CEI, to provide a one-stop shop financing. And then we went a bit further and said, even with the RBF, there's still a lot of equity that a developer will need to front, and hence we structured the RBF to have an elective option of a developer receiving 30% of the RBF upfront as a forgivable loan instrument, where the instrument converts into a grant if the developer connects, meets 30% of their impact. And then if it does not, it reconverts into a commercial term loan. So in that way, we have an inbuilt risk-sharing model upfront, at least partially for the RBF portion. And then within the CEI structure, a developer can still approach us and would provide the construction debt in partnership with crowd lending firms. And our financing on the commercial debt portion becomes a subordinate to the crowd. And what happens is what we've been seeing is we are able to, for every dollar of debt we invest, we are able to crowd in $2 from the crowd. So that means we sort of have a two times leverage ratio. In terms of successes, since inception, which is 3 years ago, we've been able to deploy and commit about 16 million euros across 4 countries in RBF contracts. So Kenya, DRC, Benin, and Mali. And there's a variability in terms of the types of projects. We have projects that are at megawatt scale. So in Kenya, we have Renuvia that is constructing a 2.2 megawatt project in one of the refugee settlements. So a highly impactful area. We have, Nuru in DRC providing a 3.7 megawatt project in Goma, which is right now under conflict, but the project has been under construction for the last 6 months. And then in Benin and Mali, most of the projects are, quite small. Couple of 50 to, maybe 300 kilowatt range. So these are community projects. And also we have another project in DRC, which is at community level. So with our approach, we're able to, scale up and down depending on the pipeline that is put in front of us. And then the other issue we've seen is we've been able to provide RBF for both greenfield projects and grid densification projects. And what that means, we are quite cost efficient from a unit economics basis, because the RBF per connection on a densification project typically is 50 to 60% lower than RBF per connection on a greenfield project. So that sort of helps us to demonstrate impact that would otherwise have been different. So that's just on the CEI front. On the risk mitigation, quite quickly, we're working with microfinance and local banks to enable them to provide end-user financing to customers who are seeking productive use appliances. And the premise of that product was we learned that a lot of distributors, particularly local, do not want to take up the end-user financing burden that has been, the legacy approach from a business model perspective. So what we've done is we become the originator of those distributors and partner them with MFIs that we have a first loss risk-sharing approach, where we've deployed, a portion of our fund to provide a first loss protection. And that means, a distributor is able to focus on, providing the lists of clients that could be financed by the MFI, and they provide the technology implementation. And then lastly, on the other portion is with Green Shift Africa, we are providing up to a 150 million line of credit for 12 months trade finance to enable financing of importation of appliances, like e-mobility equipment, cold chain, etc. And one of the interesting learning of working across these instruments is to see, like, we have opportunities where a number of companies, a company could eventually tap into all those products. So, for example, you could, apply for, Green Shift to get your trade financing and get your appliances in country. You could opt in for our RBF for the productive use appliance, and even apply in partnership with a microfinance, and where you provide the fulfillment and the microfinance provide the end user credit. And then you could also tap into the technical assistance portion of CEI. So I think one of the lessons we are learning is the need to allow pipeline to almost circulate around the instruments we have, and also being cost effective in terms of a blend of low scale and high scale kind of projects. Yeah.
Thank you, Daniel. I know my question was loaded and your answer was loaded, and I had like 20 questions running through my head, but I won't ask them. For everyone, tomorrow, I think most of our panelists, we have a full day session, and you will get to hear a lot more in detail and ask questions to the panelists. I think this is just a teaser. Moving over to Inam, Inam works slightly in a very innovative field, I think, moving away from debt equities, but to certificates that influences, like how do these renewable energy certificates, what are they, how do they influence, the deployment of off-grid renewable energy projects, what challenges do governments and organizations face? Do they even understand what these certificates are? If you could elaborate on them, because to me, this is very exciting. There are talks of bonds, green bonds and certificates, but I don't think in the off-grid sector in particular, we hear much of that. And Inam also, I think it would be good if you could touch a little bit. We often hear of, climate and carbon financing coming back. If you could also touch a little bit on that, that would be much appreciated. Thank you.
Thank you very much for that, Katrina. Good afternoon, and thank you all for your staying power. I think I'm going to start by being controversial at first. I like controversy, and we were talking about this earlier on. So I started my life working in development, okay? 2004, I was working for an international organization in London. And at the time, we were talking about the EU economic partnership with Africa. And the key issues at the time were tomato preservation. In 2025, you're still talking about tomato preservation. Okay? Now, why is tomato preservation an issue? It's because of storage. What do people need? People need resources to store their tomatoes, full stop. They need to be able to process their tomatoes and sell it. There would be no issue if people could afford to live the life they want. At the end of the day, everybody doesn't want aid. Nobody wants anybody throwing a penny at them. What they want to be able to do is to earn their clean money and spend their money. Why aren't we enabling that? Why aren't governments enabling that? I was sharing earlier today, in Nigeria, 2016, there was a report by the Bank of Nigeria, the central bank, $16 billion used for fueling diesel generators, 70 million diesel generators. And yet Nigeria goes to the AFDB and the World Bank for $500 million loan for renewables. Is there a disconnect? Clearly there is. But I'll leave that for you to think about and then talk about what IREX is doing. So IREX is an instrument. It's an ex-post instrument, which means if you have a renewable energy project or your renewable energy generator in Botswana, in any part of the world, you need certificates to support your end users. So those who are buying power from you, to say, I bought 1 megawatt of green electricity. It's being used in 65 countries across the world. We've issued maybe 700 terawatt hours worth of certificates. We started this in 2016. In 2016, in South Africa, we sold 6,000 certificates. Last year, we sold over 5 million certificates. So what does that show? It's showing that there's an upward trend. Who are those certificates coming from? They're coming from off-grid generators. But there is also a problem. And the problem is that we are not getting governments to accept this fast enough. So I was working in this role for 3 years. In 3 years, I think I got 5 or 6 governments to agree to issue IREX certificates from them. There's a country that I won't mention its name. We've been trying to get them to issue this for 2 years. And yet they want to export power to South Africa. How can a mining company in South Africa who is committed to 100% renewables be able to convince the stakeholders and their, the banks or whoever they are loaning money from, or their shareholders that they're using 100% renewables if they can't trace that electricity? And so that comes back to government decision-making, regulatory frameworks. There are opportunities with that because in India, we see that the Indian government started a REC program. I think by 2017, they'd raised over $1 billion from issuing RECs that had been reinvested in renewables in India. Imagine if all the 54 countries on the continent were able to do that. And they were doing that in a standardized way, using a plug-and-play system that the iTrack Foundation has created. They don't have to spend consultant money, anything. The only thing we suggest is that we support you, we give you training, you adopt the system, and then you plug and play it. How much money can you raise? And I was doing some thinking around, the EU is saying that for you to decarbonize and export to us, you need to meet our requirements. And so that is the carbon border adjustment mechanism. What stops African governments from saying, before you can export or we can export to you, you need to be able to commit to renewables in our country. And so we charge you a certain amount of money for reverse investment in renewables. What stops us from doing that? I don't think anything stops us than ourselves. So in summary, the instruments has grown. We see that there are lots of innovation with it. When I started in 2021, we weren't issuing any certificates to off-grid because it was difficult and complex to do that. Why? Because of data. You want to be able to confirm that a megawatt of electricity that has been consumed is actually issued. It's not phantom, it's not imaginary, it needs to have been delivered. And so we've seen innovation in that sector. We've seen REDX, an entity in Singapore that is now issuing IREX to solar home systems in Singapore. And the reason being that in Singapore, obviously because it's a small country, there's a challenge with space. And because there's a challenge with space, all the huge multinationals that are there are unable to trace the source of meet the requirements for end user claims. And so we're beginning to see that. We've also seen DREX, and we're talking about that tomorrow more fully. And that is a label on the IREX platform that issues certificates only to distributed renewable energy projects. We also see that in PREX, which is another instrument that only works in countries that have been affected by conflict. And then there are other instruments that, the same IREX that are being issued without any of the labels on them. So is there opportunity? Yes, there is. I think there's a great opportunity for innovation. I've seen, for instance, that there are companies that are requiring PPAs that come with IREX. If your PPA does not come with an IREX, they're not buying electricity from you. And so what we're beginning to see is generators are looking for IREX. It gives them additional money. And I don't think that that was registering in the beginning, but that is beginning to register now. We also see that particularly for companies in Africa, exporting companies who want to be able to meet requirements for the EU carbon border adjustment mechanism, we have standardized PPAs, and there's a lot of talk that has gone about standardization today. We have standardized PPAs that we can support them with to be able to take that forward. UAE, the United Arab Emirates, we've seen a lot of innovation from them. Obviously, they have a large solar plant, so what they wanted to be able to do is, if we are exporting to Germany, we want to be able to prove the source of electricity, of course, for traceability. So what they have done is to adopt the IREX system into their regulatory scheme. So every, I think it was 2021, all the, 50,000 tons of aluminum ingots that were exported to BMW were all certified with IREX. And so BMW can then say that they have created or manufactured cars with 100% renewable aluminum. And so we can see that that can happen in countries like DRC, where you have cobalt, or in countries like South Africa for the diamond companies. We can see all of that in different ways when you're thinking about your LCA for your product. So I'll end it there. I'll talk forever. Thank you.
Thank you so much for enlightening us. I think, and great that off-grids and decentralized renewable systems now can do it. I'm really looking forward. I had, of course, like a million questions, but tomorrow I think there's a session on DREX, and I urge everyone to join that session. I'm looking forward to it. But then you also have a government sitting next to you. And last but not the least, Mrs. Nkosi. I think earlier we heard today saying Eswatini already has 88% electricity access. And I know we looked at the World Bank data for Eswatini, and you have actually 91.6% access to clean cooking. Wow, congratulations. I hope that's true. It should be, right? It's World Bank data. But how does the government structure financing for deployment of, off-grid systems? And usually I know from experience that the moment you reach your last 15%, the last 10%, then it's the responsibility of, usually the government takes the responsibility for last mile financing. So what is, I know you've got lots of ambitions, we've heard a lot about that today. Till 2030, you want 100% access, but how's the financing and investments going into that last mile? If you could just highlight a bit on that. Thank you.
Thank you very much, moderator. And this question is very specific to Eswatini. Okay, maybe let me start by correcting the clean cooking percentage. We are at 56%, not 91. And it's mainly through electricity and liquefied petroleum gas. So yes, just like the rest of the Sadc member states, Eswatini is committed to accelerating universal access by 2030. And yes, we are currently at 88% access, as alluded to by my principal secretary. And we have achieved this 88% mainly through grid connection. And there are targeted interventions, such as we have an electrification fund, which is financed through an electricity levy. We're also in partnership with development partners. We are part of the Mission 300 Dar es Salaam declaration. And we are part of the World Bank Ascent project. And with this Ascent project, we are looking at electrifying around 200,000 households. Yes, for us to reach the last mile, we have realized that it will be difficult through the grid connection alone. So what we are doing now, we're focusing on off-grid systems. And the electrification fund allows for, or it also funds the off-grid solutions, as well as the Ascent, World Bank Ascent project. It's also allowing for us to focus on the off-grid solutions. So we're piloting mini-grids powered through solar. We're piloting solar home systems for our hard-to-reach households. And in the process, we are developing the off-grid regulatory frameworks that will inform. There was a question on tariffs, for instance, for the mini-grid. So these frameworks will inform issues of the tariffs and issues of even the licensing for these off-grid solutions. And we're also planning to involve the private sector as well as the productive use. We want to incorporate the productive use of energy for these off-grid solutions, because on their own, you find that they will not be viable and they will be so costly. Thank you. I think I can end there. Thank you.
Thank you, Mrs. Nkosi. I know I wanted to keep the time right to 6, but maybe we'll take 5 minutes. And if there's a burning question that anyone from the floor has, may I open up for questions? 2 questions, I think, at the most. Everyone seems tired. I will then take the liberty of thanking the panel members today, purely because I know we have deep dive sessions tomorrow. We have 8 sessions. Each of our panelists will be on those, leading some of these sessions. I welcome you to join us. Thank you very much. I think there's a lot to learn. Eswatini, you're a great example, I think. I like the tax levy. I'm taking notes. Sebo, my colleague actually, Sebo, if you could rise, like you, she's the one who's leading the study on this and created this session. Sebo, please take note. I think so many lessons we are learning. There are innovative delivery models. I think very often in the off-grid world, when I talk to people, we are a little bit negative and we're always worried. But I know from my own experiences, I've seen over the course of 3 decades how countries have moved from 10% to 50% to 60%. So I'm more than positive, at least in my lifetime, I always say this, that we will have universal energy access, hopefully, if not 2030, maybe 2040. So thank you very much, panelists, and we really look forward to the deep dive sessions. And on Irina's behalf, thank you also for joining us in Gaborone, Botswana. Thank you very much for all of you who have really waited patiently and listened to this great panel. A round of applause, I think.
And of course, that round of applause is also for you, Kavita. Thank you so much for taking us through the final moderation of the day. Ladies and gentlemen, that was Kavita Ray, Senior Program Officer, IRENA, and she was, of course, scene setted for by Ute Collier, Deputy Director, Knowledge Policy and Finance Center. Photographers, I'm sure you're still with us as the finals of the day, so you're welcome to come and document this final panel discussion with a photo moment. And as we do the photo moment, allow me to say thank you very much and congratulations to you, delegates. You've just concluded your 2nd day of what is clearly quite a powerful week. I've been having conversations with some of the delegates and everyone is saying, listen, we didn't have a problem with losing 10 minutes, 15 minutes into tea break or lunch. We came here to engage. We came here to absorb. So congratulations to yourself, mission accomplished, and a round of applause to you. The show continues tomorrow, so we shall be meeting in various rooms, ladies and gentlemen. As with today, there were various breakaway sessions, closed meetings as well, and presentations that were taking place. Well, tomorrow, in this very room, that is the Zodilo Suite, we will be kicking things off in the morning at 8:30 with the 8th Soul Train Conference, Advancing Solar Thermal Technologies for Sustainable Energy Innovations, Applications, and Future Directions. Other activities will be taking place for the 6th International Off-Grid Renewable Energy Conference and Exhibitions at the breakout room in Okovango Suite A and Okovango Suite B. If you need some assistance with getting to those alternative venues, which are in these premises, please do have a conversation with an usher, and I'm sure they'll be able to assist you accordingly. My name is Giselle Kebakile Mudiri, and I will be back again tomorrow with you. Thank you so much. You've been a fantastic audience. Until tomorrow, bye to you.